wondered what happens to your debt after your car is repossessed? If you owe money to your repossessed car, this debt will be discharged with the rest of your unsecured debts. Let's start the video. Unfortunately, having your car repossessed isn't the end of the road for your car loan. Many Americans owe more on their car than it is worth, and their loan is underwater. Vehicle loans are secured debt. There are two kinds of debt: secured debt and unsecured debt. If you have unsecured debt, the lender can't take away or repossess your house, car, or truck if you don't make payments. Examples of unsecured debt include medical bills, student loans, and most credit card debt. A car loan is secured debt. The loan that lets you buy the car is secured by or attached to the car. If you don't make your monthly car payments, the company that gave you the loan can repossess your car. Under state law, the company may even be able to repossess your car immediately after one late or missed payment. After a certain number of missed payments, they'll send the repo man out with the tow truck looking for your vehicle. Once your car is repossessed, you may have time to redeem it. To redeem the car, you will likely have to pay enough to bring the loan current. This typically includes the full amount of the missed payments, interest, penalties, and other charges on the loan, as well as towing and storage fees. Your state will have specific rules about what you and the car company must do to redeem your vehicle. If you can't afford to pay the redemption amount, the car company will sell your car at a public auction. The loan company must tell you the date and location where it will sell the car. Your state's laws will list exactly what the loan company must do when it sells the car. Loan companies must sell the car for a reasonable price. The sale price might not be the full market value of the vehicle, and it might not match the amount that's still owed. However, your individual state laws ensure the auction happens in a reasonable manner. When a repossessed car is sold at auction, your state's law lists who receives the money from the sale. The first thing paid is the cost of selling the car at the auction and the cost of car repossession. This includes the cost of towing and the tow truck, storing the vehicle before auction, and attorney fees for the loan company. After these costs are covered, the loan company uses the rest of the money to pay down the auto loan. This money pays fees for late payments, interest on the loan balance, and any other penalties from the loan company. Any leftover money after everything is paid gets returned to you, although this doesn't usually happen. In most cases, after the auction, there isn't enough money to cover the loan balance after the car repossession costs are paid. Many people don't make a large down payment on their new car, so they don't have enough equity on their vehicle to pay everyone. Many people mistakenly believe that giving back the car, even with a voluntary repossession, means they won't owe any money on the loan. You might still owe the loan company some money. After the loan company sells the car at the auction, there often isn't enough money to pay everything you owe on the car. This is an unsecured debt because it's not attached to anything. There is no personal property, house, or car that can be taken. The loan company can take legal action by suing you for this money. Sometimes people are able to negotiate monthly payments with the loan company to avoid the lawsuit. If you can't work out a payment plan, the loan company can go to court and get a judgment against you for the rest of the money. With this judgment, you might have to deal with wage garnishment each cycle before your paycheck hits your bank account. Deficiency judgments do affect your credit report and can lower your credit score. Car salespeople and loan companies sometimes advertise that they'll pay off the balance of your old car when you buy a new car from them. If you owe more than your old car than it is worth, the car dealership will add that difference into your new loan. This might result in higher fees, a higher principal, or a higher interest rate. It's all one big loan. You might have much higher monthly payments than you did before because of this negative equity. This might not be manageable in the long run. You may have to deal with the loan company repossessing you. If that happens, anything rolled in when you bought the car is part of the loan and will be part of the deficiency balance. The Federal Trade Commission encourages people to pay special attention to this sort of trade-in deal. Chapter 7 bankruptcy can discharge many of your debts, meaning you won't have to pay them. Your personal liability or unsecured debt will be gone. If you owe money to your repossessed car, this debt will be discharged with the rest of your unsecured debts. Filing your papers will stop the collection agency from going after you for the rest of the auto loan if your car was repossessed. Watch out if you sign a reaffirmation agreement with the lender. You agree to continue making loan payments. You can still keep the car by signing a reaffirmation agreement, but you need to keep making payments. If you can't keep making car payments in the future, you may have to deal with vehicle repossession down the road. You would lose the car, and your Chapter 7 discharge will not protect you from having to pay repossession costs because you reaffirmed the debt. That's all for today. Thank you for watching the video.